The joys of being a first-time home buyer. Saving up for a down payment can feel like trying to catch a greased pig, but fear not, my dear friends. Contrary to popular belief, the minimum down payment won't require you to sell your kidney on the black market. I'm Keith Raven, and in this video, I'll let you know what the average down payment for a first-time buyer looks like and what it takes to qualify so you can stop dealing with that horrible landlord and start dreaming of a white picket fence. It's time to debunk the myth that you need to sell your firstborn to afford a down payment on your first home. You'll be thrilled to hear that the average down payment for a first-time home buyer in 2022 was 7%. So if you're eyeing a $200,000 home, the average down payment for last year would have been $14,000. That's a small price to pay for a place to call your own. Remember, that's the average. Some home buyers may have put down as little as 3%, and then some could have been up to 20%. If you're like most Americans, you're a first-time home buyer with a limited amount to put down, or nothing to put down at all. Don't sweat it, my friend. There are options for you to lower your down payment and still score your dream home. For instance, low or no down payment mortgages could be your ticket to home ownership. Conventional loans could let you slide with as little as 3% down if your credit score is 620 or higher. Or you might want to check out the very popular government-insured FHA loans, where you could qualify with just 3.5% down. If you're a service member or a veteran, VA loans could get you a home with no money down. Just keep in mind that if you put down less than 20%, you'll have to pay for mortgage insurance and miss out on the lowest mortgage rates. But that may be well worth it to get your own home. So maybe you don't have the 3% that many programs require. There are a few other options that may help you. You might qualify for a down payment assistance program that some states and local cities offer. For example, you could get a grant to cover your down payment and closing costs, and you don't have to pay it back. Or you might be eligible for a forgivable loan, which is like a second mortgage, but with 0% interest. And if that's not enough, you could try a deferred payment loan, which is like a forgivable loan, but with a repayment requirement. So don't be shy. Ask your mortgage lender which programs they accept and whether you qualify. After all, a little assistance never hurt anyone, right? Let's pretend we live in a perfect world and everyone has plenty of down payment money. The next question then to ask would be, how much should a first-time home buyer put down? If you can swing it, put down 20% is often the smart choice because you'll avoid mortgage insurance and might qualify for a lower interest rate. But the down payment is not the only amount of cash you'll need to bring to the closing table. You'll also need to factor in closing costs. Basically, closing costs are expenses to ensure the deal is done and that it is done correctly, such as inspections, origination fees, appraisals, title fees, and wire transfer fees. These costs can range from 2 to 5% of the home's purchase price. Unfortunately, most of us don't live in a financially perfect world, and while putting 20% down on your first home is great and all, don't stress too much about it. Depending on your loan, credit score, and other factors, you might be able to get away with as low as 3% down or no down payment at all. The most important thing is that your down payment amount allows you to live your dream of having your own castle, while also giving you enough wiggle room to work on other financial goals like saving up for emergencies or paying off any debt you might have. If you can get a loan where you'll need to come up with 3% down on a conventional or FHA loan, go for it. Even if you have to pay mortgage insurance temporarily, it might be worth it to become a homeowner. Besides, your savings rate may never match the growth in home prices, and who doesn't want to own a piece of the American dream? Plus, once you build enough equity, you can refinance to a lower rate and celebrate with a bucket of ice cream in the future. Please make sure you leave a comment or ask a question. I'll try and answer them in other videos. Please like and subscribe as well. It really helps the channel grow. Thank you for watching.